Welcome back to the deep dive. So this deep dive, it's really tailor-made for you if you feel ready to move past just, running a business day to day. We're talking about starting to orchestrate a real symphony of smart, profitable algorithms. Not just marginal gains, okay? We're aiming for exponential growth here.
Exactly. Yeah, our mission today is really to give you a shortcut. Think of it as a high-level blueprint showing how AI acts as, well, the essential secret weapon for promotion. And we're specifically zeroing in on one category that turns this whole promotion engine into an absolute goldmine.
Which is?
The finance category.
Okay, let's unpack that straight away. Why finance? I mean, we see AI tools everywhere now, lifestyle brands, travel.
Yeah.
Why are we dedicating this deep dive specifically to, wealth management, investing, crypto?
Well, it really boils down to two things. Conversion intent and the metrics that really matter most, which are RPM and CPM. The key insight, the core idea is that finance content doesn't just promote something, it actually explodes your potential income. Because the audience is just incredibly high value and crucially ready to act.
Okay, give us the numbers then, the staggering numbers. What kind of contrast are we talking about in earnings potential?
Right. So if you look at let's say a general lifestyle niche, you might see CPM that's cost per mil, cost per 1,000 impressions maybe floating around $2 to $5.
Pretty standard.
Yeah, kind of thin margin territory, But when you shift to finance content, you're targeting investors, savers, entrepreneurs, people making huge decisions.
And what does that difference mean for the actual CPM?
It means premium dollars. Finance content attracts bids, often netting $20, $30, sometimes even $50 CPM.
Wow, okay.
That means a single piece of content is potentially worth 10 times more just because of the subject matter and, the quality of the audience it brings in.
That's an enormous difference. It's fundamental to the business structure, isn't it?
Absolutely fundamental.
So that's the big reveal right there. The goal isn't just being informed. We're trying to extract what the sources are calling a lifetime mastery manual, skills to keep you, unstoppable for decades. And that means we really need to understand the why behind this revenue rocket fuel you mentioned.
The why is actually pretty simple. Advertisers in banking, investing, crypto. They basically drool over this kind of targeted traffic. Well, yeah. They know the audience reading about, say, stock picks for 2030 is actively looking for an investment platform. They're primed, ready to convert on big ticket decisions.
So if you're a creator, your content instantly becomes this passive income powerhouse. You could potentially see, 2 to 5 times the earnings boost.
Easily. Yeah, 2-5x. Just by focusing your AI efforts on this specific category, the leverage is just stunning.
It really is.
And think about it, a relatively simple AI-generated piece on, say, AI-driven stock picks for 2030 that can immediately pull in premium ads, from the Vanguards or Robinhoods of the world. Yeah. And suddenly you're netting $30 plus RPM. That's high-quality monetization right from the get-go.
Okay, now the sources also emphasize tracking metrics, quarterly, using tools fused with AI predictors. That sounds like moving beyond just looking backward, right? More like proactive foresight.
Precisely. Yeah, if you're leveraging AI with tools like Google Analytics, you're not just waiting until year-end to see how you did. You're forecasting. Yeah. You're seeing potential RPM spikes or dips practically in real time. We kind of call it the Warren Buffett remix.
Okay, I like that. What's the remix?
Buffett's line, risk comes from not knowing what you're doing?
Sure.
Well, AI ensures you do know, profitably. It lets you pivot before the market zigs when you thought it would zag.
Right. Proactive profitability. That's the foundation we need. Okay, so this is where we shift from the why to the how. A lot of listeners probably know standard digital promotion, but orchestrating this symphony of algorithms you talked about, that requires deeper strategy. So what are the battle-tested strategies, the ones that really democratize promotion in this finance space?
Okay, the sources distill this down into 6 core pillars. Let's call it the AI promotion arsenal. And pillar 1 is maybe the most critical in finance, content creation and building trust.
Right, because in finance, trust is the currency. We know AI can help with writer's block, sure, but how does it build that essential trust? Especially when you hear claims like AI personalization, boosting engagement by 30 to 50%, that sounds, well, a bit like a fluff metric sometimes. Is it real?
It's not fluff. It's about the mechanism behind it. See, AI personalization goes way beyond just using someone's first name in an email. It analyzes their past behavior, what articles they read, what links they clicked, maybe what stage of investing they seem to be in, and then it crafts content that specifically addresses their likely needs or, fears. It doesn't just write a generic piece, it writes something like crypto risks in a recession, but maybe tailored slightly differently for a high-risk tolerance millennial versus someone closer to retirement.
Ah, okay. So the mechanism is that behavioral intelligence leading to hyper-relevant content, and that's what drives the engagement spike.
Exactly. Relevance equals engagement.
Yeah.
And the RPM magic comes in when, while you're creating this relevant content, you strategically weave in those high-value keywords advertisers love. Things like tax-advantaged IRAs or maybe fiduciary financial planning. That's the bait for the premium ads. And we've seen this work. There are examples of small fintech firms using this exact strategy, automating personalized investment newsletters, and seeing client acquisition jump by like 27% in just 6 months.
That's a really powerful validation. Okay, that level of behavioral targeting sets us up perfectly for Pillar 2, SEO mastery and prediction. You mentioned AI eliminates the guesswork. It becomes the keyword crystal ball.
It really does, yeah. For finance pros, this means moving beyond broad terms and targeting those long-tail queries, the ones that attract searchers with, frankly, deeper pockets. Think about the difference between trying to rank for just investing tips versus something super specific like AI tools for retirement planning over 50.
Right, that specificity, that's the high RPM twist, isn't it? You're focusing on the quality and the likely affluence of the searcher, not just raw traffic volume.
Precisely. The AI assesses the probable financial intent, maybe even the likely wealth bracket of the person typing that query. It's kind of like the Moneyball analogy, but for SEO, using sabermetrics for keywords, if you will.
Okay, I get that. Finding the undervalued assets.
Exactly. AI predicts which long-tail terms are undervalued, easier to rank for, and likely convert better because they solve a very specific high-stakes problem for a potentially affluent searcher. That's how you push your RPM well above that, $15 mark pretty consistently.
And the predictive side you mentioned, that means playing defense too, against market shifts or competitors.
Absolutely. AI is constantly scanning. It monitors competitor content moves, watches for Google algorithm changes. It can predict a potential ranking drop before it actually bites you, giving you time to adjust your content strategy. It's offense and defense.
Very smart. Okay, moving on to Pillar 3, social media domination. Finance is, volatile. It can be a minefield. How does AI help professionals build and maintain credibility, that crucial trust, on platforms like X, which often feel kind of chaotic and fleeting?
Right. AI acts like your 24/7 hype machine, but one focused on credibility, not just noise. Take Hootsuite's AI, for example. It's constantly scanning for real-time spikes in major financial news. Let's say there's a wave of cyber fraud news hitting the headlines. The AI can prompt the finance pro. Hey, sentiment is spiking around fraud. Promote your fraud detection tips now. Timely relevance.
So it enables that timely relevance, which builds trust because it shows you're current and genuinely helpful. What about the CPM booster aspect for social?
It comes down to high engagement formats that actually offer depth.
Yeah.
We're not talking about quick memes here. Think detailed educational threads on X about topics like ethical AI investing, content that people actually save, reshare, discuss. When you create these thoughtful long-form formats, you attract those luxury finance advertisers who value that sustained attention. And that can juice your CPM by, say, 40% or more.
Okay, so shifting from just noise to providing real depth, that's key. Which brings us neatly to Pillar 4, email and personalization. Moving into that more intimate space, you called emails gold-plated invites.
And they really need to be treated that way, especially in finance. AI segments your lists almost like a dedicated personal assistant who knows everyone. So instead of blasting everyone with the same newsletter, you could send a market crash survival guide, but only to subscribers whose past behavior suggests they're risk averse, while maybe sending more aggressive growth strategy ideas to those who seem to be seeking higher returns.
Okay, hold on. Let's pause on a really crucial point here. Compliance. That sounds potentially tricky. When we talk about AI personalizing advice, like sending an email recommending an AI-optimized bond ladder, how do we ensure that doesn't cross the line into unlicensed financial advice? Does the source material address that liability?
That is absolutely the right question to ask, especially in this field.
Yeah.
And yes, the sources are quite clear on this. The AI needs to be trained very carefully to provide only information and education. It should base this on publicly available data and the subscriber's own self-declared profile or past interactions. It's not giving direct, personalized advice that leads straight to a specific purchase decision. That's still the human advisor's job.
Okay, that's a critical distinction.
It is. And, crucially, the AI also automatically flags compliance issues, things like GDPR rules, canned spam regulations. It ensures the delivery mechanism itself is compliant. This helps avoid major regulatory headaches, while the human expert handles the actual recommendations. Bank of America saw a 20% boost in cross-sells using AI chatbots. It shows personalization, when done compliantly, really pays off.
That distinction, information versus advice, is absolutely vital, essential for building a stable, compliant business. Right, moving on. Pillar 5, paid ads and automation. How does AI turn ad budgets into, as you said, snipers?
Instead of the old shotgun approach of broad targeting, AI zeroes in on high net worth leads with incredible precision. And the real maximizer here is something called dynamic creatives. Traditional A/B testing. Honestly, it's just too slow now.
Okay, dynamic creatives, that term gets thrown around a lot. For our audience, people ready to really orchestrate these algorithms, what's the mechanism? How does AI actually test, say, 100 variants overnight?
Right. So dynamic creatives means the AI breaks the ad down into modular components. Different headlines, different body copy snippets, various images or videos, different calls to action. The AI then automatically mixes and matches these components, testing hundreds or thousands of combinations on small segments of the audience in real time. It instantly sees which combinations resonate best, maybe hooks like AI versus inflation are killing it, and doubles down on those while immediately cutting the underperformers.
So it's constantly optimizing, maximizing relevance, and minimizing wasted ad spend almost instantaneously.
Exactly. That speed of optimization is the game changer. And then layering on top of that, focusing on those hyper-specific finance niches can dramatically boost your CPM again.
Right. You mentioned targeting niches.
Absolutely. If you target a really high-value niche, like, say, insurance products for a specific demographic, you can see CPM rates soaring to $40 or even higher, much more than general financial ads. The deeper and more specific the niche, generally, the higher the advertiser's intent and willingness to pay.
Makes total sense. Okay, finally, pillar 6, analytics and prediction. This sounds like where AI moves from just reporting past data to actually becoming that crystal ball you mentioned earlier.
It foresees, yeah. It enables real-time pivoting based on predictive insights, not just historical reports. Think about customer churn. Instead of realizing 3 months too late why users are leaving your finance app, tools like Mixpanel's AI dashboards can actually predict churn risk. It might flag a user the moment their engagement drops by just, say, 15%. That gives you a window to intervene with targeted messaging or an offer before they actually leave.
Wow, that's powerful. And credibility in finance is also built on showing resilience through history, right? How does AI help there?
That's a great point. You really should use AI to backtest your content strategies and your advice frameworks against historical market data. Reference major events. How would this approach have fared during the 2008 financial crisis or the 2022 crypto winter? Backtesting provides immense credibility and helps ensure your advice is genuinely resilient, not just based on the last 6 months of good times.
This AI arsenal is seriously robust. Okay, before we get to the final income playbook, let's just quickly summarize the essential toolkit. What are the key tools people need if they're building this finance promotion empire?
Okay, quick rundown. For content generation, brainstorming, outlines, think ChatGPT, Jasper. For deep keyword strategy and SEO, Surfer SEO is strong. For the advanced personalization, CRM integration, HubSpot's AI Hub is a major player. For social listening, tracking that finance buzz, Brand24 is good. And if you're doing sophisticated video explainers, which work well in finance, look at tools like DeepBrain AI.
It's quite a suite of tools. The scale of this is immense, isn't it? When you hear someone like Sundar Pichai say, generative AI could add trillions to the global economy, you realize this isn't just about optimizing a small business process. This is tapping into macroeconomic leverage.
It really is. And to make sure you get your slice of that leverage, we need that high-income playbook. The final 3 steps are critical for really maximizing your RPM and CPM.
Okay, lay them out for us. Step 1.
Niche down. Be specific. Hyper-specific niches like AI crypto strategies for beginners or tax planning for expat entrepreneurs attract the highest bids. Think $25 plus CPM potential. You narrow your focus to actually widen your profit margins.
Okay, niche down. Step 2.
Audience quality. You have to use AI to rigorously segment and target high-value viewers. Maybe investors age 35 and older with a certain portfolio size if you can identify them. When you can demonstrate verifiable audience quality to advertisers, they pay exponentially more. Because they know their message isn't wasted, it's hitting people with actual wallets ready to deploy capital.
Right. Quality over just quantity. And the final step, step 3.
Content depth. The sources really stress this. Long-form finance guides. Think 2,000 words or more. Well-researched, supported by professional visuals or data visualizations. This leads to higher dwell time, people actually spending significant time engaging with your content. That sustained attention translates directly into premium ad bids and higher RPMs across everything you publish.
Niche down, audience quality, content depth, that's a clear playbook. This has been genuinely a blueprint for mastery, I think. So if you're listening right now, the challenge seems clear. This is definitely a marathon to mastery, not some overnight sprint. Maybe start small. Pick just one strategy this week, perhaps focusing on finance content generation, using those high-value, long-tail keywords we talked about.
Absolutely. And maybe remember the larger implication here. Mark Benioff called AI the most important technology of any lifetime. This isn't just spreadsheets and charts. It's about building sophisticated connections, building trust at scale. Think about the movie Her, the sophisticated AI companion.
Sure.
While maybe not that advanced yet, AI can inspire genuinely nuanced chatbots, personalized client nurturing systems, tools that build the deep trust needed before someone trusts you with their high-value financial decisions.
So you're architecting a legacy here, an advantage built on algorithms. The final question for you listening is, what's your first AI move going to be? Start making that profitable magic happen. We'll see you next time on The Deep Dive.